So let's quickly talk about mortgages. Buying that first one, most people are getting in with the FHA loan, right? It's 3.5% down. You buy $100,000 property. It's $3,500 that you need to get into that property. A lot of times you're not going to find things too much cheaper than that. You might have state funded plans here in Massachusetts. We have mass housing that allows you to get in for 3%. But that is typically right around where what you're gonna need to do. So $500,000 purchase, roughly 15,000 bucks is what you're gonna need to get in. FHA is a great program. FHA allows you to leverage out. There's not too many assets that you can buy, and we're going to talk about that. But assets you can take control of with such a small amount of money down. The reason I start here as well is because a lot of new investors, they again complicate things. They heard about driving for dollars, or they heard about probate, or they heard about, when that very first purchase, just go traditional. Get your mortgage broker. um, Find a good solid lender, get that FHA, get that traditional mortgage, conventional mortgage, or whatever it may be, if you don't qualify for the FHA, and just go traditional, learn the business, and then second, third, fourth, fifth purchase, you can worry about some of the more complex things. So let me dive into this. Not all mortgage companies or mortgage brokers or mortgage lenders are created the same. I apologize if anybody works for Bank of America or Citizens Bank or Wells Fargo, but please do not go there for your mortgages. Those are awful places to go for your mortgage. I used to work for Bank of America. I used to work for Citizens Bank as well. Those institutions are great for checking accounts. They are not great for lending. And the reason, I think somebody has a question. If you have a question, please, put it into the questions box, and I'll answer it as soon as we have a chance to stop. Um, those institutions are great for checking accounts and other products, but not mortgages. And the reason I say that is because you want, when you're buying something, uh, and again, this is the way I feel. I want somebody who's going to cater to me, who treats me special, because I am special and you're special, and you should find somebody who treats you like that. Somebody who you have their phone number. If you walking into Bank of America and you sit down with their mortgage specialist, and he or she takes your application and fits you into one of three buckets, and then your loan application gets kicked up to some kid in North Dakota who's processing your loan, and it doesn't quite fit the three buckets or the three books or the three slots that Bank of America has. They kick it back, and maybe you're disapproved, or maybe you can only get this much. What you would ideally want is a mortgage broker, someone who focuses on mortgages. They're not doing checking accounts and credit cards and 203K loans. They're focusing on mortgages. They have a variety of programs, and they're kind of reverse engineering it. They're basically saying, hey, Willie, you're sitting down with me, and I see here's your credit score, here's your income, here is your debt. And what I'm going to do is I'm going to take all those elements, and I'm going to put them together, and I'm going to find a program that fits for you. And if it doesn't fit perfectly, I'm going to massage those things and make it fit for you. That's ideally what you want. A connection that you have, somebody who's personally invested into you. And I think that you're going to get that with, I would say, one or two things: a local mortgage broker in your market, or a local bank. Like I said, I would not go to a national lender. I would go to, Atlanta Savings, if that's even an institution, right? Or Chicago Credit Union. If those are the institutions that I would cater to, because they're more in tune with what's going on in the neighborhood, what trends are happening in the neighborhood, and they can cater more to your specific needs. One last point I'll make about that is, a lot of times, most when you're going out with your real estate agent, you're most likely going out and seeing homes on the weekends, most likely in the evenings and the weekends. Bank of America shuts down at 5 o'clock. If you need an adjustment, right? Let's say, for instance, you got a pre-approval and it is for $400,000, but the house that you're looking at is $425,000, but the rents that it's collecting or tend to be a little bit more, which also affects your pre-approval, right? You want to be able to call your mortgage broker on his or her cell phone and say, can I make this adjustment, and have them be in their house and say, yes, here, I'm going to hop on my computer real quick. Let me call you back in 20 minutes. Here, I've made some adjustments. Here's the new pre-approval. Submit this over the weekend, and run with that. So you want a more of a personal relationship at the end of the day, if that makes sense. I'm gonna answer a quick question really quickly. The one mortgage program, if you recommend going through a credit union, yes, credit unions absolutely. I'm not too familiar with the one mortgage program. As a first time borrower, I'm familiar with NACA. NACA does a lot of stuff. It's a zero down. Not a huge fan, and I'll explain a little bit more of that a little bit later. But not too familiar with the one mortgage, to be honest. So that is mortgages. And let me ask you one: does FHA require owner occupant for single family, thus requiring 2 and 3 units, 4 unit properties be investment? FHA does want you to be an owner occupant. So that's a very good question. FHA does want you to be an owner occupant, and hopefully I'm answering your question here. But you do not have to. The key is you do not have to live there forever, right? So my wife and I both bought 3 family properties with an FHA loan. She lived there for a few months. I lived there in mine for a couple of years. We both moved out and then initially rented our subsequently rented our units out, and then still kept the FHA loan. There is a requirement that says you must occupy. And again, unless they've changed the rules, I don't know that there is a time restriction on your occupancy, right? So if you stay there for a few months, if you stay there for a few years, I think that is entirely up to you. But there is the purpose of that program is for you to occupy or you to intend to occupy. A property 5 units or more is considered commercial. That's not eligible. Right. So anything FHA is, when I say multifamily, I mean 2, 3, or 4. Anything above 4, 5, and above is considered commercial property, and you will not be able to use an FHA loan with commercial property.